So this is not a technical talk. This is talk about more of an entrepreneurship, starting a business type talk. I've talked to a few people here in Potato recently about startups who want to have a shot at starting a business. And I was talking to Rob, and he suggested maybe I could talk about this. Before I start, a few questions. Anyone here was involved with a startup, working for a startup, with a startup before? 1, 2. Okay, anyone would like to start their own business? Anyone has aspirations, dreams? Okay. That's a good question, by the way. Does Potato count as a startup? And that's exactly what I'm going to talk about. So before I start, let me say a bit about myself. Why is this an issue I'm interested about? So about 4 years ago, in 2008, I set up a company named Empiric in Israel. Initially, it was a startup company. We had a product, we built it, we tried to raise funding, we even raised funding, we tried to market the product, and it didn't work. And then we had another iteration of a different product. It was moderately successful. Then we had another iteration of another product, same thing. Eventually, we settled on being a software development shop, kind of like Potato, but much smaller. We decided we instead of building our dreams, which was difficult, we'll try building other people's dreams. We work for equity, and for not only for equity, but also for equity, which put us in a position where we had to evaluate startups. And I'm still trying to keep very much in touch with the startup scene. So I've had to evaluate startups before, including my own, and it's always a difficult task. And the idea of this talk is to briefly kind of give you anyone who's interested in ever starting their own business, basically give you a really simple tool at evaluating whether your idea, or what does an idea mean as far as its impact on your life, and whether it's a good idea or a bad idea. It's a very short talk, so I'm not going to go into details on how you do market research, how you evaluate, how to raise funding and things like that. It's more of a very quick rule of thumb on how to approach an idea. So before I actually talk about this tool that I wanted to share with you, there are so many startups out there. Is anyone here in touch with the London startup scene, or who consider himself in touch with the London startup scene? So I'm sure you all know a few blogs down that way. In Shoreditch, there is a very lively startup scene. If you go to meetups, and there are a bunch of meetups, you'll meet all sorts of people who claim they're building a startup. These can be people who have a really small scale idea for a very niche web application. These can be people who are trying to build the next Facebook, and there is sort of an explosion of ideas, and I've seen this happening along the past year here in London, and also in other places, like in Israel, where I come from. You see more and more people basically setting shop in their garage and starting something. And I see many people approach the idea of building a business from the Roman perspective, and this is my opinion, that startups are mostly not a product or an engineering challenge. They're mostly a marketing challenge. And I'm coming across many people who don't put enough emphasis on the marketing perspective. Here we're all engineers, or mostly engineers, and we tend to think that because we have an engineering ability, that we can, that's what it takes to make an amazing idea. And unfortunately, more often than not, or almost exclusively, this is not this is not what will make or break a business. So things like build it and they will come, that's not a good idea. I wouldn't do that. I've done it before. It doesn't work. Also, once you start building something, doesn't matter whether you're technically inclined or not, you become emotionally attached to it, and that is a good thing, because when you're emotionally attached to something, you have a drive, and drive is the most valuable resource when you're starting your own business. But it's also a problem because you get blinded. It's hard to see. It's hard to hear when someone gives you negative feedback. It's hard to change. It's hard to evaluate your idea. And finally, a very common pitfall is for people who say, I can take the risk. I'm young. I can quit my day job for a few months, and using my savings, I'll build something and it will work. And basically what I discovered, what I think I've seen many other cases, is that risk is a problem. Basically, my suggestion is evaluate your idea based on how much risk or how risky these ideas are, and try to avoid risk as much as possible. And I'd like to present a tool today that will help you to kind of evaluate your idea on how much or how risky your idea is and what the implications are. And that idea is something I call the venture scale. Venture basically is a pretty simple idea. So you have this scale. On the one hand of this scale, you have just being a full-time employee working for any tech company in the city, and on the other side of the scale, you have pretty much the most venture, high-growth business you can imagine, which is Facebook or any other large-time startup trying to change the world. And the important point is to understand that there are many different types of businesses along this one axis. It's not just I want to build a startup or I am a full-time employee. You have many things along the way. So basically, if you want to be a contractor, it's a bit more risky than being a full-time employee. If you go up the scale, if you want to open a grocery store, there is risk involved, and many people, most people in the world, are not willing to, or are not willing or don't want to take this risk. Most people are happy being full-time employees. Building a grocery store is hard. You have to borrow money, you have to get the stock, you have to choose a location, maybe the location isn't that good, maybe you have a large competitor opening their shop next door. There is risk involved. Opening a software development shop, much like Potato, also risky, right? Finding customers is risky, marketing is risky, and it's not really risk. It's risk that is hard to take. Even for big companies, it's difficult to take risk. For someone small, for someone who's starting on their own from their garage, it's hard. But then when we enter the more of a technology startup domain, there are still many different types of businesses that you can set up. So I'm listing here a few examples like Basecamp or GitHub, Sauce Labs, any kind of subscription-based business that targets this particular niche is risky, but it's fundamentally less risky than something like Facebook. And that's the point I'm trying to get at, and I would like you to think of ideas in terms of how risky they are on that scale, on that point between being a software development shop and Facebook. And and I think it has many implications. That difference in risk has many implications, basically on your lifestyle, on your life. So when you have an idea and when you think, well, this is a cool idea, it can change the world, or I know someone who would pay for this, think of what this would mean for your lifestyle. Because I think it's first and foremost a choice of lifestyle than anything else. We all want to make money, we all want to live our art, but it's basically down to how we want to live our lives. So if you can switch to the next slide. The first implication this has is in terms of commitment. Right? When you are on one hand of the scale, you have very low commitment. When you are even when you're an employee, you have a lot of commitment, but still you can change. You can pick up your things and leave. You can decide that you want to do something completely different. You can go on a vacation. All these things change fundamentally as you go towards a more risky type of businesses. When you're building a world-changing business like Facebook, it's at least what you're going to be doing for the next 5 years of your life, at least, and that's I would say a conservative approach, maybe the 10 next years of your life, and that's if you're successful, of course, if you're successful. But that's a very strong commitment. You're going to basically pour all your creative energy into this one thing. It doesn't have to be this way. You can decide that you're going to build something smaller, something that will, of course, not change the world, but maybe change your immediate surrounding. Build a nice website, a content website. Maybe you put some advertising on it. Maybe you monetize it some other way. But commitment-wise, it's much less commitment, right? You can start building one thing. You can build a nice mobile application, nothing too complicated. You can make a little bit of money on it, have your name around. Much less commitment. You can then decide if you're going to do something else. But if you really want to change the world, that's tough, and that's a real commitment. Next kind of dimension we have to look at is funding-wise. So, try to list a few things on this very simplistic slide. But basically, there are various ways to get funding for your startups. Some ideas don't require any funding at all. You can get money from friends and family. You can get angel investment. You can get venture capital investment. But the type of idea that you have determines the type of funding you can get. So friends, families are nice for £10,000 or dollars, doesn't matter. Maybe a little more. And you don't have any kind of commitment as to return your investment because it's your friend or family. Other than that, if you borrow from your friends and family and you don't make it, it's kind of not a very nice situation to be in. But going towards the more interesting ideas, the ideas that are worthy of the name startups, angel investments and VC money, venture capital money are the main two funding instruments, and they're very different and very particular. Angel funding is good for around 100K and above. Of course, you can find angels that will invest fast. You can raise funding from a few angel investors and raise up to, I would say, around £500,000 or dollars. But the important point is the return on investment. The return on investment an angel investor expects for investing 100K is a company with a yearly revenues of around 100 million pounds or dollars again. So otherwise, if it's less than that, it doesn't make any sense for the angel investor to invest. If you have a nice phone application and you do the math and you discover that you can't make that kind of money, don't go raise angel money because they will not invest in your startup. This is even more important for VC money. So if you're trying to raise venture capital money, which starts around $1 million, $1 million pounds, and can be for A series or for A series round can be around up to 3, maybe 5 million. What they would expect from an investment from $1 million dollars would be around 100 million. A company that has 100 million in yearly revenue. That is huge. To get to that kind of money, you have to have really a world-changing ideally. You'd have to have a really solid basic business model that targets probably $1 billion industry and above, and it has to be big. And if your idea is not, if the company that you're setting up, because this is for sure a company, a big one, if it's not up, if you cannot reach 100 million pounds revenue in your business plan, then don't go raising VC money. They're only looking at companies that can generate that kind of income. Yes, I've seen VCs invest 70 million pounds or dollars, especially during when times are bad. But that's the math, and that's the implications of ideas. Let's switch to the next slide. Control of your companies. So when you're small, when you're starting your own thing, you're 100% in control. If you want to make something interesting, if you want to make one of those base camps or GitHubs or whatever, you're probably going to need partners. You can't do it on your own. If you don't have partners, first look for partners. It's hard. You need your drive on its own is not enough. If you're going for the big ones, if you're going for the risky Facebook type companies, you're not going to be the CEO of the company. You're going to lose control at some point. Most likely. I'm saying most likely because I'm giving Facebook as an example. And Facebook is really, by far, represented a very minor share of different types of companies out there. Most, 99% of startups that have raised VC funding, or not that, but a very high percent of companies that have raised VC funding have lost control of their company. So that's the implication. This is why I like venture scale, because you can see every type of an idea, what implication it has. We click to the next slide. Number of employees. So if you're small, you're on your own. If you're building a nice business, you probably have a couple of dozen employees, 10, 20, 30 employees, maybe 50, 60. But that's the kind of company you're going to have. And if it's your company, if it's your idea, it's your lifestyle. So again, if you're building a medium-sized business, you're going to be invested in that business for a few years, right? You're going to work hard. Maybe it's going to still be your company, but it's going to be a large company. And if you want to go for the larger companies, then you're going to be investing years in this. You're going to lose control at some point. You're probably not going to be the CEO, because if you're ready to do VC funding and you're small and you're just, someone starting small, business will not let you keep control of the company. It will not let you be the CEO of the company. And that's just about it. So it all comes down, in the end, to lifestyle. What kind of life do you want to have? Do you want to have the ability to change what you're doing? Of course, you can always start something and stop and decide it's not worth it. You can start building the next Facebook, and then after a few months you decide, well, I'm going to quit. Or maybe you're going to fail. But assuming you're going to succeed, if you want to succeed, at the very minimum, you're going to have to invest all your time. And you're going to have to invest it for a few years. And you're going to, and it's going to be the number one priority in your life. I'm talking about the Facebook style businesses. And it's going to come at the cost of other things, right? You're not going to be able to do anything else large scale at the same time. So basically, that's what I wanted to talk about. Before I say a few more things, any questions so far about the venture scales, about how you see startup businesses in relation to risk and evaluating your ideas?
How do you do customer validation? Do you just talk to them?
Okay, so that's a completely different issue. And I would first, what what I try to encourage entrepreneurs is to first think about this before actually before evaluating any specific ideas. First, it's a matter of a lifestyle. And usually what you find is you can say what kind of lifestyle you would like. And then from that you can derive what kind of ideas you would like to consider. As an answer to your question, after you decided on an idea and you see that it fits with the kind of lifestyle you want, you understand where you get your funding or if you need funding, doesn't matter. So yes, customer validation is a very important step. I would say before you start writing one line of code, most likely you can approach your customers and ask them, before you've written anything, before you have anything to show, go to your customers, ask them, would they expand the product, maybe come with a few screenshots or wireframes, and ask them, do they like it? What else would they like to see? Would they pay for the product? How much would they pay for the product? This varies drastically depending on the kind of product that you're building. If you're building some kind of a report generating for a larger enterprise company, then it's usually very easy to prepare the report by hand, go to the executive, show the report, ask, would you pay for that? If you're building a social network, it's much harder to evaluate, to get to your customers, and to get an answer. A very good tool that has been recently launched is Google Consumer Surveys. For 500, maybe 1,000 pounds, you can get answers to these questions. And it's hard, and before that it was really hard to get good answers. So spend the money, do the research, approach your customers. If your customers are just anyone in the world, you have a big problem. But you have other problems, because if your customers are anyone in the world, then how are you going to market to these people, and how are you going to sell to these people? These are big problems, much bigger than how you're going to build your product. But I don't want to get diverged too much. Any more questions?
I've got one.
Sure.
How do you evaluate a small startup like Facebook and what you know?
So I don't know much about data from the financial point of view and things like that. But the question is evaluated for what? If I was now deciding on should I or should I not build a software development shop, one way to approach the problem is to see how many other people out there are doing the same thing. If there are other people doing the same thing, it's an immediately good thing risk-wise. Even if you had an amazing idea and you discover someone else is already doing it, so what? It's a great market validation. It means someone is already, hopefully, making sales and generating revenue from your idea. So yeah, study your competition, see how they're doing their marketing, see who their clients are, and then start to evaluate whether you can do the same thing. But to look at someone else is a good approach. Does that answer your question? Any other questions?
Yes.
Yeah.
You mentioned in several of your slides, for example, related to the number of employees and related to the amount of funding you get, how much control you have over your company. How important do you think you should emphasize that? Like, is it important to have a lot of control or not? Does it depend on the scale of the company?
That's a good question. Sorry, I'm going to stand over here so they see me in the camera, but I can't see you very well. It's a good question, but I think the point is it's up to you. It's a decision that you want to make. If you want, to start a company and then you don't mind, being the chief architect or being a consultant or whatever, and you don't want the center stage. You'll happily have, some professional CEO manage the company as long as you get, your creative say and your involvement. Then awesome. Then go for it. You can aim for the big ones. Still, you'll have to work hard, at least at the beginning. You have to work very hard to get the funding. But on the other hand, if you see yourself managing a company, if you want to be the head of this thing, if that's where you see yourself, then don't aim for the Facebook type, right? Unless, of course, you have years experience and you've done it before. If you've done it before, this all changes, right? But if you're the first-time entrepreneur and you want to lead a company, right? Go for the smaller scale projects. It's good enough. It's amazing. You can build something wonderful, but don't try to change the world. At least in my opinion, because that doesn't align with the type of lifestyle choices you make. Okay.
Thanks.
So I think we're out in terms of time. Any more questions? Cool.
So
Good luck.